Hello, good morning, everyone. My name is Chris, GBC. I want to share my market analysis on British Canadian dollar. The first thing you observe on my screen is that we're currently on a daily time frame. Usually, I start my analysis from weekly to daily, 4 hours. Then, usually, 1 hour is my entry. But sometimes I start from, let's say, the daily. Very few occasions I start from the 4 hours. I usually start from a higher time frame because the higher time frame gives you a reliable structure bias of the market as it is without not disturbing your head or racking your head. You observe that we are bullish. We are currently bullish. Why would you say we are bullish? We are bullish because we broke structure to the upside, took out this very high here, this high at 1.7218. Then we took this very structure here to the upside, 1.72828, and we formed a bullish candle. So it tells me that we are actually very bullish. So uh, that could that means I can actually come to the 4 hour time frame. The 4 hour time frame. So on the 4 hour time frame, what am I going to be looking at? Okay, the 4 hour time frame too, we are actually bullish too. Are bullish too because on this very side here, I can see a break of structure, a break of structure to the upside. Sorry about that. No, oof. Okay, break of structure to the upside. And okay, next thing I'm going to be looking for is after breaking structure to the upside, I'm going to be looking for inducement, the zone which buyers were the zone that actually bought. Inducements, if I'm wanting to buy, it is the zone that buyers actually initially bought, but buyers were taken out of the market. If I am to sell the market, inducement will be a place sellers actually sold, but were taken out of the market before the market will now continue its conventional trend. In this very case here, okay, there was a break of structure. This was a zone that actually broke structure. And if you look at this very zone as a zone that broke structure, if you look at this zone as a zone that broke structure, you observe that buyers here were actually taken out of the market. So if buyers were taken out of the market, the next thing I want to do is go to the 1 hour time frame. And of course, with the 1 hour time frame, okay. On the 1 hour time frame, okay, I have a high, I have a low, I have a high, low. Then this was the zone that we had buyers were taken out of the market. Then what happened was that the structure was actually broken again to the upside. Now, oh, okay, oof, okay, better. Structure was broken to the upside. Now I have a fair value gap over here, over here. Um, okay, I have a fair value gap over here. And so what am I looking at? We already confirmed the market is bullish on the daily. We already confirmed the market is bullish on the 4 hours. We already confirmed the market is bullish on the 1 hour time frame. Now we have three time frame saying the same thing. So what do I do here? What I usually like to do here is look for a zone where buyers were induced into the market, and after them being induced into the market, they were taken out. I look for price to get back to that very zone, and that will become my entry. Now, if that falls in a zone that has an imbalance, very, very good. It shows that it's a high probability zone. It doesn't necessarily mean that it will hold. If the zone falls in a previous day low, very good. It shows that it's a high probability zone. Doesn't mean that it will hold. Trading is a matter of probability. It doesn't necessarily mean that with all your confluences, they all add up. It doesn't mean it would work. But usually, what traders usually like to do is we usually like to go for high probability setup. Okay, so if you come here, you will see a bullish candle, small bearish candle, then bullish candle. At this very zone here, buyers were induced into the market and were taken out. They were taken out of the market and but took out the took out structure. Now in this very zone, if you come to this very side, you observe that there's an imbalance. Then equally to over here, this very zone here, which is 1.7225 is the previous day's low. So we have a confluence of one, the previous day's low, which is liquidity. You have an imbalance here. The imbalance here acts as an attraction and a rejection zone. So if we put all these together, I would like to see this low being taken out. Then at this very zone here, I would like to see a morning star as a confirmation that the market will move to the upside. And that will take us to 1.7343.